Hi, this is James Shug with Westpac London's end of day report for Friday, February the 10th. Another negative day on markets today, actually right across all markets really, with Greece certainly the centre of attention yet again, although the session did start here in Europe with a bit of a downward bias following some disappointing Chinese trade figures in the Asian session. But the overnight story was that I better just get these details correct. So Germany's finance minister pointed out that under the arrangements that were being negotiated this week, by 2020 Greece would have a debt to GDP ratio of 136%. Now that compares to the 120% that they would have had under the October arrangements, which only involved a 21% haircut for the banks. Remember, we were talking about an 80% haircut perhaps for the banks, the creditors of Greece, in the current deal that's been pulled together. So even with a much bigger haircut for the banks, much deeper austerity cuts that the Greeks finally seem to agree, at least amongst the politicians yesterday, Germany doesn't look like it's going to be satisfied, and the Greek finance minister said that he would resist pressure for further cuts. Actually, we had the Deputy Foreign Minister of Greece resign over this. It's starting to break apart a little bit, this idea that we might be actually getting a deal pulled together. There's rioting in the streets of Greece. There's another union strike, I think almost national, going on at the moment in protest at the austerity measures. So it's by no means a done deal yet, and reflecting that, markets are down quite sharply. We also had a dip in the University of Michigan's February preliminary read on consumer sentiment in the US. The Conference Board Confidence Index for January also slipped, so we're getting a bit of a consistent message coming through there. The US trade deficit widened to $48.8 billion in December, a little bit wider than expected. Exports are up, but imports up substantially more. And that's about it in terms of the main news stories of the day. So for market movements, we've got the London market down 0.75%, the French market down 1.5%, and the German market's down 1.4% today. And the Dow in the US down 1.01%. It's currently just after 7:30 in London, so we're just heading into the afternoon session in the US. The Dow level is 12,759 as I speak. Commodity markets are weak up. We've got oil prices down 1% today, $98.86 a barrel. Copper prices down 3%, and the gold price at $1,718 an ounce. It's down, let me see, 1.3% today. Given all that, equity markets down, commodities down, renewed concerns about the European and indeed US growth stories, and China too. The Aussie dollar is weaker. It's at 1.066 against the US dollar at the moment. It was at 1.08 yesterday, and it's down against the euro too at 0.809. That is, one Aussie dollar will now buy you just under 81 euros. So euro cents, that is. And that is about it for the week. Okay, other than to say that the Reserve Bank's monetary policy statement in Australia basically said that given the inflation outlook, unless we were to see another blow up in Europe or further weakening in domestic demand, maybe interest rates are appropriate for the time being. But with some of the banks having lifted their mortgage rates, effectively leaving monetary conditions a bit tighter than the Reserve Bank may have assessed, and with Europe starting to look a little bit messy as well, the case for a rate cut in March, I think Westpac still thinks, is there. Okay, I'll leave it there for today. Back next week.